expectations on regulations are already in the bank trade. But at 224, you're going to be hard-pressed to convince people to buy the banks.
Well, and I'm not going to try to
referring
convince
to
them to buy the banks,
the yield on the 10-year note, obviously. Sorry.
Yes, I gotcha. I'm going to echo a little bit of what Joe said, Judge, because that invisible hand under the market isn't really our Fed anymore. That invisible hand is take your pick. Either Trump's policies go through under President Trump or in a scenario where he leaves office under Mr. Pence. So I think that invisible hand, which is lower regulations, lower taxes, and things like that, are why we're not seeing any oomph to the downside. Now, last week we talked about the backwardation. That's where that spot VIX got really high, over 1550, and the rest of the curve was considerably lower, the weeklies in particular. So what we look at now, Judge, is back to contango. So to Joe's point, when Joe was talking about how quickly these things happen, Brexit last year lasted about 30 hours on that increase in volatility. The presidential election didn't even last 8 hours. And now you had that move last week on Wednesday when it hit its zenith in that fear factor, and then it just ebbed away so quickly. I mean, we're back under 11 now. So one more quick thing, Judge, with OPEC going on this week, and whether it's going to be a 9-month extension or even a 1-year extension, the 1-year extension would be a little bit of a blip to the upside, I think anyway. We could ask Joe about the energy markets. But right now, the OVX, it's down near the lows of the year. So, I mean, you're back down right, just barely holding 30 for the volatility index for oil, and that's not really what you'd expect going into an OPEC meeting.